Hi YouTube, Regina here from Simply Fundamental. So, the market looks like it's taking a downturn. This tariff talk has been spooking the markets, and so people are selling. Now, why am I so excited? Well, I've been planning for my retirement since I was in my teens. My brother sat me down, and I've told you this before, and we had a conversation about retirement. And at that time, I wasn't even really working a full-time job. I mean, I have been working since I was 15, but generally the hours around school and the idea of retirement, even though I was young, was enticing to me. Setting myself up for the future, not even having to work and earning money, that was exciting to me. And so I was all in. Anyway, the moment I started working a corporate job, I started saving for my retirement. Even though I had debt and even though I had credit cards and student loans to pay, I was investing in my retirement. So I have seen quite a few market downturns, and every single one of them gets me excited. Generally, what happens and when the market gets spooked, stocks go on sale. And while I may not be buying individual stocks, I am invested in the overall market. And sometimes that means companies of quality are going to be offered at a sharp discount because some people are spooked and sell. And as Warren Buffett likes to say, be fearful when others are greedy and be greedy when others are fearful. And so the fact of the matter is, I've been dollar cost averaging and investing in my retirement since I was young. And I am now at the point where I put more money than I did when I first started because of a higher age and I'm allowed to go up to a certain limit, and the IRS limits change each year. And then there's the after tax dollars that I do. And so, in reality, these last few years, while I've been buying in, month out, I've been paying a bit more for the stocks I have been buying. And so the idea that they're going on sale is good for me. I do not plan to use this money. And so I recognize that markets that often drop rebound, and I've seen them rebound. We recently just came from an all-time high. The other thing that I realize is there is such a big disparity, am I saying that word right, between incomes. The top and the bottom are vastly different amounts of money. Like, for instance, the top 10 wealthiest people in the world, the way their money grows, a vast majority is compounding and compounding wealth. And so some of the richest people in the world earn more in a day by their money compounding and the growth of their money and just the overall how all their investments grow by $100 million a day. Now that's insane. That's not the kind of wealth that I am accumulating. Now, that said, when these assets that they hold drop, they're not earning as much either. But it gives me an opportunity to get a bit closer to where I need to be for retirement. So that makes me excited. And it also makes me excited at the fact that I could buy more assets at a deeper discounted price. And so the more you have, eventually that means that your future returns are going to be better because now what ends up happening is you're getting dividends on your money. But if month in and month out you're buying more shares, when it's time for dividends, because you're paid on your dividends by share, the dividend yield is better. And so let's just pretend you got 38 cents for every share that you have. Now you have more shares because instead of buying 4.8 one month, it dropped a little. Now you're getting 5.1. That's even a little bit more. So month in, month out, the compounding matters. And wealth is built over the long term by compounding. Majority of the wealth is built by compounding in your returns. The other thing that it really makes me happy is because this presents such an opportunity for people who have not started investing. And so even removing myself from the equation, the reality is a lot of people go into retirement with no money. And so for me, the idea is it's very difficult, even psychologically, for people to buy in at the high. But now you're getting a lower entry point. And so a lower point to get in, yeah, it could drop more. You might be able to get it at a better price. No one knows. But what we do know is you're not buying it at the all time high. And so that lower entry point makes me super excited because it also means that other people can have the opportunity to grow and build wealth, the same opportunities that all the wealthy had. Now we're getting them too. And so I think of that long term growth potential for people who are just starting out. And the reality is, it's harder for people now than it was in the past. But if the stock market and the housing market and things retract, things will become a bit more affordable. And then, therefore, when things eventually rebound and go to new all time highs, which they've always done because the overall market tends to end up being worth more because dividends are giving out by shares, people's money are going to be worth more. And that makes me excited. The next thing that it does for me is it allows me to really understand and learn about myself. I know my risk tolerance, and every time a market downturn happens, my reaction has been the same. I'm not buying individual shares, I am buying into the overall market. And so I'm not too much concerned if Apple drops 8% and Tesla drops 10. And I'm more concerned with the fact is some of these companies that are in the S&P 500 today may not be there tomorrow. And so out with the old, in with the new, the top 500 companies are there, and that's what I focus on. Or if I'm doing the overall stock market, it could be, the top 2,000, 5,000, depending on which exchange traded fund that I am invested in. Then there's the reality is that I'm still a bit away from having to touch from my retirement. And so if my investments were not properly set, it gives me the opportunity to say, geez, I'm highly invested in the market now. Maybe this might be an opportunity for me to take some cash that I have on the side and build that up, let's say. And if the market drops a bit more, maybe I'll take a little bit of that cash and move it into the market. And so market drops give me the opportunity to really test my own resilience. How do I feel about the overall market? Do I feel that I have enough? Am I watching my shares and is it making me uncomfortable? And if it is, then it just gives me the opportunity to instead say, let me just redirect money that I have coming in and move it more towards cash. It's not that I'm selling. I leave my money to compound and to grow. But if I feel that I took cash to buy a sale, then I start to beef up my cash position. And so that opportunity for me is also to learn more about how I am with the market because the way you respond to the market is going to change with time. So, yeah, those are some of the reasons why. I'm seeing my doors open and close. Sorry about that. Market suffers their worst day in years following Trump's new tariffs, plus what could potentially go wrong. I don't know. I think that it's something like that on Apple News. Anyway, I hope this finds you well, and I hope you're not spooked because there's always news, there's always bad news that could turn the market, and there's always good news that could turn the market. And so I'm in it for the long haul, and I'm really not worried at all. Even if when it dropped 20% or whatever it was back in 20, I wasn't worried. To me, a market downturn provides the best opportunity to accumulate wealth. And that's why I want more people invested. Talk to you later.